Hello everyone. In this video we are going to talk about Tesla. To gain a comprehensive understanding of the present state of Tesla's stock, we must look at the whole picture from multiple perspectives. Before we begin, if you like what you see, please consider to like, comment and subscribe to my channel. Tesla's recent market performance has left investors in a bit of a confusing state. The closing price, registering a modest uptick of just over 3%, settled at approximately $242. This performance, when juxtaposed against the broader market's movements, raised queries about the inherent strengths and vulnerabilities of Tesla's position. Of course, the fact that Tesla has not experienced any bearish sell-off is a sign of strength in by itself, but investors who have large stakes into the firm sometimes feel that the company is now just trying to enjoy its existing achievements without preparing for the challenges ahead, such as the burgeoning economic issues in many of its key markets. For example, North America and Europe have been affected by the high inflations. One due to the stimulus money, the other one being affected by the energy cost. In terms of news, the recent information has been mostly about insider sale of their stake in Tesla, as well as their overseas investments. In this regard, I believe that business is going as usual, but it sometimes feels like the calm before the storms. Tesla ultimately relies on a healthy economy to sustain its sales, and currently the economy is affected by inflation and the hidden unemployment in many parts of the world. It would be interesting to see whether the business is still booming 12 months from now. While it's never wrong to be careful, we should also recognize the latent opportunities that may guide Tesla towards a positive trajectory. A critical juncture to closely monitor is the $240 to $242 range, which holds a very important support level. Sustaining this threshold opens the door to a potential bullish resurgence. While not etched in stone, dismissing the prospect of a rally from this vantage point prematurely might lead to missed opportunities. A double bottom has been identified for Tesla, which is usually a bullish signal. The significance of this pattern should not be underestimated. A potential ascent could materialize upon breaching the resistance levels at $250 to $252, potentially propelling the stock to a zenith of around $265. However, it is crucial to recognize that this pattern operates within a shorter time frame, demanding vigilance and judicious optimism. Now, let's take a look at the technicals, where the bearish sentiment seems to pervade. The relative strength index and moving average convergence-divergence metrics both hint at the prevailing sentiment. The prospect of short-term upward momentum, triggered by stop-loss mechanisms, don't seem to hide the fact that the resistance levels are going to be an issue, represented by the 50-day moving average and the 21 exponential moving average. Tesla's price action is highly correlated with the broader market currents. A testament to this symbiosis is the performance of the Nasdaq index, which teeters on the precipice of pivotal moving averages. The implications are far-reaching. If it falls, the reverberations are likely to cascade onto Tesla's fortunes. This dance between individual stock performance and broader market trends underscores the complexities inherent in contemporary stock trading. While the market has been expecting a major price correction in the U.S. equities market, such a move did not occur because there are many people looking to park their capital in one of the few safe havens in a time of uncertainty around the world due to conflicts and instabilities in general. There are also a few other factors to consider when it comes to Tesla stock price. The Consumer Price Index, a pivotal economic barometer, possesses the capacity to sway Tesla's trajectory. While a favorable CPI outcome might furnish a transient fillip, the path forward has a lot of resistance. The journey towards a substantial rally is fraught with multifaceted resistance levels that Tesla must surmount before embarking on a formidable ascent. Overall, I think that Tesla remains a key player in a burgeoning industry, but the stock has been in the center of a lot of contradictory signals, and I believe that we need to have a certain degree of caution when dealing with it. The market remains at a crossroad between the continuation of a bull market or the beginning of a major sell-off that is caused by the correction after 15 years of increase for the equity market. Tesla may be able to hold on to the current prices, but I am not convinced that the market is ready to send Tesla to new highs in the current circumstances. This is why I believe that the best approach is to hold on to the existing positions, and to buy a little bit every week or so, over the next 24 months.